So we're in a bear market. It's I say particularly brutal, but they all feel brutal.
I mean, this one is statistically longer so far, and it doesn't really seem like it's going to get there any faster. It doesn't seem like we're going to go. There's no real bullish catalyst. Maybe the ETF.
Definitely ETF.
I mean,
ETF's
BlackRock
bullish.
would be a game changer.
Oh
Yeah.
yeah. That's a question of when, not if.
Yes, and there's some rumors about
Like
that.
April.
Is that what you've heard?
Yeah.
Well, my question about it really is how do you pick the first one? Because you're picking a winner, and that's like bullshit.
I
they
think
have to
it'll be
let them all-
multiple at once.
I think they're going to give them all at once.
Yep. Agreed.
Off to the races.
Okay.
In April.
Yeah. You think April
That's what I think.
with the halving?
Yeah.
Are we going to have the halving?
I don't think they're smart enough to equate the two. I think it's just dumb luck, but I think that's what's going to happen.
If there's a halving and a BlackRock ETF and all the others at the same time, we're all getting girlfriends.
It's like Christmas comes early.
Our
Christmas
girlfriends
in
might get
April.
girlfriends.
Yeah.
It's going to be an interesting April, regardless.
Well, the mining industry kind of needs it.
Yeah.
So you talked about early on. You were like, "What's derivatives?" I've been waking up thinking I needed derivatives.
Do we have to really get into that yet?
I mean, I
was having fun.
I was gonna say.
You're saying this isn't fun? I just told you I was going to make it
There's
sexy.
there's a lot of miners today that don't exist anymore that probably wished they had Matt and his wonderful suite of products to actually make it through some of this stuff.
They're
Okay.
actually your
And what-
products. I just made them.
That's a good point. That is a good point.
How many miners have we lost in the last year?
Ooh. I'm not going to name names, but
Any significant ones?
well, I mean, Celsius Mining actually was pretty large. Like they had tens of thousands of machines and are, I think, no longer. Corsair, of course, went bankrupt, but it sounds like they're going to probably emerge. There was
Or
a big
hosters.
default that NYDIG ended up holding. That I don't want to. Yeah, there's
Well, no, look, if you want to say it, we're not going to censor you.
well, I'm just saying, I mean, that happened. So Iris defaulted on a big note to NYDIG. And so that's another, effectively a default of a subsidiary company, kind of is like a hold co. It's not my area of expertise. There's been quite a few that have gone under, and certainly the economics are as bad as they've ever been. That's without a doubt.
Yeah, I mean, it's not all just because they weren't hedged. I mean, the truth is, like, they weren't hedged in a lot of different areas, right? We already talked earlier about, poor power deals, not hedging their treasury, not hedging, hash price, through revenue. But a lot of them was just kind of got caught in the fervor of the bull market and making bad deals. So it's just a confluence of bad decisions.
Right. Okay. I mean, the mining business is ultra competitive. We have the ASIC manufacturers who love to flood the market with ASICs and never seem to have a consistent pricing. They just get as much money as they can and get as many machines into the market as possible. I think are they the only true winners in this market?
So
It's got a high beta to Bitcoin, right?
yeah, high beta to Bitcoin, and they change their pricing every day based on ROI. They have like an internal model for what they think ROIs of these machines will be, based on a bunch of different parameters, and then they change pricing based on that. So that's why pricing does seem to be sort of out of nowhere, but there is an internal model, and it's based on ROIs, not based on cost to produce the machines. Like the cost to produce a machine is, I think, in on the order of like a couple $100, if that.
So they crush.
Yeah.
The margins are high, but there is a ton of R&D. Chip development is expensive. They do crush, but there's, them and stablecoins also seem to do pretty well.
Well, it's also a good model too, right? Because everyone's incentivized to have the most efficient machine. So it's just like it's like the iPhone, right? Like every year you come out with something a little bit better and everybody wants it. So it's
slightly different. I can survive without the next iPhone, and it doesn't mean if I don't have the latest iPhone, it doesn't mean I walk a bit slower.
no, but it's true. But I mean,
You've
there's
got
some
the latest
people.
iPhone. You've got the second latest iPhone.
Is it? Which one is it? Yeah, but I don't have the new one.
Nick's fact checking. But
You got the
people,
second latest iPhone.
people are still mining with S9s, right? That's the iPhone 5.
That's the iPhone 5.
Yeah.
Yeah.
I mean, barely. So if you had an S9 running at 3 cents, you make maybe like 10 cents a day. But you deploy enough of those and
Yeah. But I mean, the manufacturers make money by making new machines and incentivizing people to buy them.
But still, as a miner, you kind of have to have the latest machines to be, especially if you're a public miner, to compete, right?
I wouldn't say you have to.
Depends on what your energy costs.
Yeah, Bitfarms has a really interesting strategy right now where they're really focused on the IRR of their investment into machines. So they don't have the most performant fleet, meaning they don't have the best efficiency. So their efficiency is quite a bit higher. They have poor efficiency relative to the rest of the market, and we say their efficiency is higher, so it's, they're probably somewhere in the 30 joules per terahash range, where the most recent S21 that just came out was in the 16 to 17 joules per terahash range. But they are also buying machines that they think they can ROI much more quickly, and thus basically make a return on their investment, as opposed to thinking exclusively about the joules per terahash and like long-term value prop of the investment they're making. So that's part of their strategy. That's like included in a lot of their like public marketing and stuff like that.
They have a lot of cheap energy too, right? They focus on renewables and.
Yeah, they focus on areas outside of the U.S. So they've been brave enough to deploy into places like Argentina and Paraguay, which have significantly lower cost of energy here. But also, Argentina, you have potentially issues with rule of law.
Kinda, yeah.
They can. I mean, yeah. It's a very real possibility in Argentina that somebody comes and nationalizes your site, where probably not. I mean, there's almost a 0% chance that happens in Texas.
Yeah, I think the bigger risk in Argentina right now is if Javier Milei wins the election, which he's looking like he will. I mean, he won the primary, he had 30% of the vote. I think he will form a coalition and he will win. I mean, his policies are pretty clear. He's going to dollarize the country. He's going to get rid of their central bank. And if he dollarizes their country, he's going to end subsidies on energy. Energy prices are going to go up in Argentina.
He's running on ending the central bank. There's a difference in actually doing it.
Yeah, but he is a pure libertarian. And if he dollarizes the country, they won't need a central bank. What's the role of the central bank? He wants small government. But they have massive energy subsidies in that country. And
you think that goes away?
Well, look, when you dollarize a country, what you do is you hyperinflate away the currency, because I wouldn't know any reason for anyone holding Argentinian peso right now. But if he wins the election, the next day, that currency is pretty much dead. Because if you dollarize, you're saying this currency is over. They went through the same in El Salvador. What was the currency called? The Quilo or something? I can't remember.
I don't know.
But that's what happens. And I think it's what the country needs. I absolutely think they need it, but it's going to be devastating for the poorest people in that country, because they're the ones who are in the peso economy. They can't get into the dollar economy. The middle upper class are in the dollar economy. They hold US equities, or they hold Bitcoin or stable coins, or they've got dollars buried in a garden or in a safe. All the poorest people haven't, and they're the ones surviving on the subsidies and the handouts of the peso. And so once that's gone, they're going to have to adapt to a dollar economy, and everything's going to get super expensive overnight. And my assumption, that means energy is going to get more expensive.
Right.
That's my assumption, but I don't actually know. Paraguay's interesting. These guys just gave me a sticker today. Penguin. Yeah, they're in Paraguay.
Good buddies of Luxor.
Yeah, they're in Paraguay.
Paraguay, yeah.
All I know about Paraguay is they have massive hydro dams, right?
Well, they have two really big ones, but the one everybody talks about is called the Ayatapu, and it's the one between Brazil and Paraguay. And right now they sell almost all of that back to Brazil for, I don't know, something like a cent. So if miners come in and say, we'll pay you 3 cents, that's kind of how they started. That's kind of how Bitcoin mining started in Eastern Washington. We were selling, I live in Washington, they were selling all that energy back to California at like a cent. Gigawatt came in and said, we'll buy it for 3 and we'll buy all of it. And the locals were like, what? Okay, that sounds awesome.
Thank you.
Yeah, and then I guess, of course they overbuilt and then ended up going BK and all that stuff because they ran out of cash. But that's a story for another I guess
podcast.
I don't know, but for another podcast. It's a pretty brief story. They overextended themselves, went BK. Okay. A tale as old as time for Bitcoin miners, unfortunately.
And the only other thing I know about Paraguay is they have the most interesting goalkeeper in the history of football.
Why?
This guy called Chilavert. Look him up. Look up Chilavert.
Danny, can you get that? Can you look that up, Danny?
No, trust me on this. This is wild. When I tell you the interesting thing about this guy, he's a goalkeeper, played for the country as well. How many goals did he score in his career?
As a goalkeeper?
Yeah, 46 goals. So he's 617 appearances, 46 goals. He scored 8 goals for his country. Bear in mind, most goalkeepers never score in their entire career. They might have like one.
So what's the reason?
He took the penalties,
Okay.
but he also took free kicks. So go to YouTube. You just got to see this guy. So it's fucking mad. Also, weirdly, he follows me on Twitter.
Does he?
Yeah.
So
Go on YouTube and
This is a
search
long
out for
time ago.
Chilavert free kick. So he would go up and take the free kicks, and if he scored, he'd obviously celebrate. If he didn't, he'd have to run back into his goal. Here he is. But he's a goalkeeper. It's just, I think it's just the most insane thing that a goalkeeper scored essentially 1 in every 11 games. It's just insane. Yeah.
I made his mark.
Yeah. Sorry, I deviated. I'm a football guy.
I know you love it, man.
Everything comes back to football. I don't even know where we were. What were we talking about?
We're talking
Talking
about
about Paraguay.
Oh yeah, Paraguay. No, before that. So,
Bit farms.
but it seems like the model or the market for miners or mining, it's so ultra competitive that everyone's constantly finding a new edge.
Yes.
What is their edge now? What is their edge?
That's anything.
Of course, but it's such an ultra competitive industry. There's so much pressure on these companies. Companies that look like they're worth billions of dollars or hundreds of millions, and then suddenly they disappear because of one mistake, one power contract, or
Yeah, I
like
think
what pressure?
it's interesting though, but like it's only, I think it's only relevant because it's such a nascent industry. Like
Right.
if you look at this in oil and gas or agriculture or metals or whatever, like same shit happens all the time, right? Like
I don't know. You tell me.
oh, it does for sure. Like everything's ultra competitive. Everything's like, how do you lower your operational costs and how do you increase cash flow and how do you get revenue certainty? And it's all a game of competition, right? And so I think it's just more interesting here because we're living it, because this is the space we're in.
What is it these companies should have done differently? Why should they have had you on the phone, Matt?
Well, it's interesting because, to be honest, even 2 years ago, there wasn't a whole lot of hedging tools for miners, specifically around their revenue. If they want to talk about their treasury, there was Bitcoin derivatives, and there's tons of those. Energy, same thing, like energy contracts, every derivative, futures, ETFs, swaps, forwards, you name it, existed for 100 years. But they just weren't. I think it's twofold. One, you were caught in, like a sporadic bull run mentality, and no one wants to hedge during a bull run. And you probably shouldn't be, but you need to hedge for the future. And then the other thing is, like, I don't think a lot of these people, no offense to the industry, but I think a lot of people didn't come from, mature business backgrounds, and they just kind of had to learn on the fly. Like it was a lot of people that were interested in the technology and kind of built businesses around it, but didn't have hedging backgrounds or didn't have how to manage an operational business background. And I think it's just evolving over time as it naturally would.
So you're basically saying it's such a new industry. These new players have essentially tried to establish what the industry is, but people with a more traditional background in other industries, they would have bought hedging strategies with them, and they've just not had this. But it's happening now. I know it's happening now, right?
Yeah, no, it's definitely happening now. People are getting smarter, and I think they had to, right? The last 18 months were brutal. And if you don't learn your lessons and adapt, you're going to be one of the people that we talk about in the future that's no longer around. And so if you want to remain solvent, you got to get more mature in how you operate a business. And I mean, honestly, like it's the same thing happens in, like I said, in oil and gas and agriculture. And in a previous career, we used to talk to farmers about the same thing, like how they should be hedging. And farmers are just like miners. Like they always think their crop is worth more than it really is and don't want to hedge and view it as gambling. And a lot of it's just educational efforts. Like you have to educate people on the benefits of hedging because it's not sexy. It's just the cost of doing business.
Is it like insurance? Like some people go on holiday.
Yeah.
They should have insurance, but they don't bother because it's like, it's a couple $100, I'll be fine. And they get out there and they break their leg and end up in the hospital. It costs them a fortune and it fucks them. Is it similar? Like,
it's very similar. Like at a broad level, yeah, hedging is insurance for sure. Like you're not going to make more money hedging, but you're gonna wake up and still have a business.
it's good socialism.
Sure. I'm not going to get a Marty Bent curveball thrown at me, like get out, abolish the Fed or anything like that?
No, not
Okay.
yet.
Okay, cool.
I'm from Europe. Me and Marty see the world differently, but I love Marty.
That actually happened to me.
It did.
Yes.
It was, I was about to say, we need the backstory there is that on Matt's first big podcast,
It was I think it was my first podcast in this space.
went on TFTC and talked about some derivatives. And then at the end,
It was great. I mean, Marty was great. And I could see like a smirk coming on his face, and I'd been warned. And sure enough, he's like point blank with a deadpan was like, so you think we should have abolished the Fed? And I was like, well, I didn't really say anything like that.
Did it lead to that?
No, it was out of the blue. He was trying to trip me up.
We had the Fed guy in here yesterday. Do you know the Fed guy on Twitter?
Joseph Wang.
Yeah. So I asked
How'd
him
that go?
Good. I mean, it's
Yeah.
great. It's teaching us all about the Fed. And I said to him, do you think we should get rid of the Fed? And he was like, absolutely fucking not.
No.
Like, he's just like, are you what are you on about?
Well, he worked there. Of course, he's going to say that.
No, look, you can see both arguments. You can see what the Fed does and how it influences markets and how it makes certain people like picks winners and losers, and it's usually the poorest who lose the most.
Yeah.
Riches the cantillionaires, but also at the same time, he's like, you don't want these banks going to the wall because of a liquidity crisis.
No.
And so, I mean, I'm not going to take a position.
Well, I
don't
mean,
know
the
enough.
truth is, and what I told Marty is, it doesn't matter what I think or what Marty thinks is not happening. So,
That's a different point. Yeah.
yes.
Yeah, that's a different point. I mean, it can happen in places like Argentina because they get rid of their sovereign currency, and
Yeah.
the Fed is their central bank at that point. But
Yeah, I don't know. I mean, who knows? If U.S. continues on the path it's at, wouldn't rule anything out.
yeah, we'll have a curveball for you at the end.
I appreciate that.